Yo, 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 yo. But at the same time, we're doing this, we're doing this, we're doing this. En also mine.
Nou ja. Wat er rekening mee had. Ja.
Nee, Elio kanske. What the heck? Why are you not coming up? So, finally. Done deal. Let's see this. Okay, let's put some music on. Let's see if we can do this. Downloads. No, doesn't work. VLC. Let's see. Let's do this. Alltså jag kommer inte igenom VLSen. Jag får inte till det riktigt. Jag vill inte börja sitta här och... Trying to get some music to the stream, but it ain't working out as we want to. But we're almost done there. Yeah, fuck it. Let's jump into the markets. Let's do this. This live session is about the markets, not the music. So, with that said, we had an interesting day yesterday. We had some news, and how's my voice compared to the music? Good. We had some news, and yo, let me see first what's going on here. I'm sharing the wrong screen. One second. Over there. This is it. All right, perfect. So, we had news yesterday. FOMC had their meeting, and Jerome Powell did his usual statement, and he was very dovish in his speech. He was very dovish, and it affected the market, as we could see. So it had a big effect on the market, and what happened was basically the market expected him to raise the interest rate with 25 basis points, and that's what he did, and that's what they did, the Fed. And the important thing was, so that didn't affect the market so much. Basically, nothing happened. We had some volatility when during that announcement, but when the press conference started, he was more dovish. He was dovish in his in the way he spoke. It was kind of like giving dovish indicators, so to say, and that made the market rally. That made the US dollar drop, and that made the market rally. Because when interest rates is going down or staying the same and are not raised as much as believed or as expected, what happens is the US dollar goes down. Because when the interest rates goes up, people want to, it's not even about the people, it's institutions, countries, they want to buy up US dollar to keep their money in US dollar because the interest rate is so good, right? But when interest rate is not as good anymore compared to other investment assets, then people start to withdraw, convert the money from US dollar to other currencies or to bonds or gold and so on. And most often it's gold. So that's why you often see gold flying when the US dollar drops. And that's what we saw yesterday. So let's look at the markets yesterday. So this is our trade from yesterday, but we can get to that soon. We want to look at the US dollar. We want to look at Bitcoin first. Sorry, at the gold first. We'll look at Bitcoin as well. So this is gold. This is the US dollar. And as I said yesterday, it's been on this bull run ever since July, ever since summer 2021. And this is due to interest rates going up, basically. As soon as the hawkishness in the interest rates switched, we started to become more dovish. We also see the market starting, we also see the US dollar starting to drop. And right now the US dollar is inside the sweet spot zone from this whole swing, from here, this bottom to this top. We see the US dollar inside the sweet spot zone. And what does that mean? That means we got, this is a zone where the market tends to go to, where buyers and sellers tend to fight over getting the control of the market. And we will see what happens here. Most often there's a lot of liquidity here. US dollar came down. Oh, sorry. One more thing about the US dollar. So this is yesterday. Let's look at yesterday. I'll give you a big picture. This is what we saw yesterday. This happened. Boom. Jerome Powell started to talk. Came into, here somewhere. And then we saw this big sell-off of US dollar. And what happened in the same time? We saw this big pump for gold. So let's clean this chart up a little bit, and so you guys can get a picture of what I'm seeing here. It's always good to start with a naked chart. You want to do that. So first, we're going to look at the volume profile for gold. So gold has gone up a lot. Let's fix my screen a little bit. You can see things better. Yep. So gold has gone up a lot, and where we're at now is in a zone of low liquidity. We're in a zone of low liquidity. All the liquidity, like you see some first liquidity zone is here between 1900, 1900 and 1905. 1905. Then next zone is here that we spoke about yesterday. Is between 1870 and 1880 basically. And then we get the big liquidity zone down here. Now, let's look at fib, because you see this pump here. I think this pump is going all the way up. It might go all the way up to 1965, 1975. Why is that? Well, let me show you. So we had this whole swing. And from that swing, let me just rearrange some stuff here so I can see things better. So we had this whole swing from this top going all the way down to this bottom. And now we're moving back up, clear liquidity that we left behind here on the swing. But the question is, how high are we going? And I said it for a while now, I think for a month now, that I think we're going all the way up to the demand zone. Sorry, to the supply zone, I mean, not the demand zone. And the supply zone is right here. This is the supply zone. Oh, snap. This here is the supply zone. So the supply zone starts at 1973. Say 1970. Markets love whole numbers. Say 1970. That's where the supply zone starts. And what I see for this to happen, for here to happen, is I see the market coming in here, maybe playing around, but or maybe we just get a top like this and then reverse down. So the question is, what level in the supply zone will act as that reversal zone? All right, because we need to come down and clear liquidity here. This is what we need to come down. We got a lot of liquidity stuck here in these zones, and you see a lot of volume stuck here. So we need to come down. Even if we want to go up higher, we need to come down first, pick up some liquidity, clear some liquidity, and then move back up. This is how the market always works. And people also that have made a lot of profit on this whole bull run here will also want to sell off, cash in some of their profits, wait for the market to take a breather, come down a little bit before they enter again. Okay, so where here can we see a reversal? The most obvious, of course, is people will say here. Somewhere at this top, we will face resistance and markets will probably reverse. It's not always that easy. So what we're going to do is we're going to pull Fibonacci from, and by the way, we're on the daily time frame right now. We're going to pull it from the bottom of this swing. 1 second. We're going to pull from the bottom of this swing, from this bottom to this top. All right, look at this now. Where does that put us? That puts the 78.6 Fibonacci extension right beneath this cluster, this consolidation area that we've been in for a couple of days. And it's been acting as support, right? So we had a strong support there. But that still doesn't give us the area that we go into. So let me delete this one so we don't have too much drawings on the table. And let's go to the 4 hourly time frame and see the last swing. What zone does that put us to? So the last swing, we had this swing up to this top. Now we have another swing happening here in the same sequence. All of this is one sequence. But inside that sequence, you will find many swings. You see all these ups and downs, higher highs, higher lows. Sometimes a little bit break of structure, and then we move on. So here we have another little swing. We have a low, and it goes, you can argue this high or this high. It's not this high because after this comes a a higher low, and then a higher high. So we're still in the same structure. But here, we're starting to play around a little bit. So I'm gonna pull Fibonacci from that bottom to that top, and we'll see where that puts us. From this bottom to this top. And it puts us here. The 27.2 extension, which is a very common reversal. I learned this one actually when I was trading crypto a lot. Bitcoin always had a tendency to reverse at a 27.2 Fibonacci extension. And that's what we see here. So I would argue that we will probably see reversal here somewhere at the 2000. Yeah, at the 2000. I will say we will see reversal here somewhere at the 2000. That's the sell zone. So we still got a way to climb. This is still this is no not a small climb. This is a climb from 1960 to about 2005. Let's say 2010, where the reversal might happen. And keeping in calculation that we just saw a big climb yesterday from 1922 to 1960. So we'll see if we first come down, clear some of this liquidity here. I'll zoom in a little bit so you understand what I mean. So here is a lot of liquidity, a lot of buy orders not triggered, a lot of sell orders not triggered, and in the same time we got all the volume down here, right? So there's a big chance we see something like this. You see this 78.6 Fibonacci retracement? Yeah, that's the start of the supply zone. A lot of supply up here, right? So what I think will happen is I think we will chop our way all the way up to this zone and reject this one. Come back down, test these areas before we go all the way to this sell zone that I was talking about. We're gonna see what happens here, and then we go for a big sell. That's on the big time frame. On the small time frame, I don't dare to say if we're gonna sell or we're gonna buy today, because you guys know I like gold. I like to trade gold, but the problem is that market is reacting emotionally, and when market is same thing like a person. When a person reacts emotionally, you cannot reason with that person in the same way as the person is still peaceful and harmonic and nice. Same things with the market. When the markets are reacting emotionally to news and events, you cannot reason with it in the same way. So you just have to wait for the emotions to play out until the markets are calm, and then you take care of it. You see what's going on, you talk to it, you see the story, and you jump in and do what you need to do. You need to treat the markets like a girl, like a woman. If a woman is watching this, I hope you take this with all respect. So you have to treat the markets like a woman. Like when she's emotional, you don't get emotional. You wait till those emotion runs over and then are out, and then you talk to her and you reason to her. Same things with the market. So treat the markets like your lady. Treat your lady better. Your lady will probably treat you better. You know what? It's the same thing there too. I got to do the same analogy. It's if you don't treat the markets with respect and discipline, and if you don't like focus on it and give it your attention, the market will slap you back just like a lady. So be focused when you trade. Like, trading is not playing around. This is important to understand. People that jump into trading and think they're gonna get rich tomorrow, forget that. If you believe that and this is what you want, I can tell you right now, stop trading, because you will lose money. You will not win money. You will lose a lot of money. You can gamble in the casino. Yeah, it goes much faster. The trading business, the trading industry, it's something that requires a lot of discipline, a lot of experience and practice. And even if you have signals, people sending out signals and stuff, like, let's say you take my signals, I'm telling you to buy here, sell there, and so on, take profit and everything. Sometimes things happen during that trade. And when you know the markets, when you understand what's going on in the markets, you can react to that and do quick decisions. Maybe I'm not looking at the market right now. Even if I'm calling out the trade, maybe I'm not looking at the market. Maybe I'm in a meeting or something else. I'm in the gym or whatever, so I don't see the markets. You see the markets. You see something happening. You can do decisions for your own trade. You don't have to wait for me to send out a signal and tell you exit this market, this trade is not valid anymore, take your profits, move stop loss to break even, and so on. So it's very important for you to learn and understand what's going on in the markets. Even if you have an automated trading bot. I have a I have a trading bot called Itina. It's phenomenal. And it's trading for me. It's doing about 7 to 12% for me every month. Even though I have it, I still trade the markets myself. I still study the markets myself. Why? Because I want to know what the trading bot does. I want to be in tune with what it does. If it fails, because it happens sometimes. You have technical failure. You have it's a bot. Sometimes it reacts upon stuff that it shouldn't react off, and so on. So overall, it's doing profit, but it can do much more profit if you know what it's doing, and you can cancel a bad trade that it's in, or yeah, you understand. And then of course, if you can enter good trades that you see. So to summarize it, study, learn the markets. There's plenty of YouTube videos. You have some on our channel, Prosperous. There will be a lot more coming out now. We're stacking up a whole academy, and you will see a whole Prosperous Academy popping out soon, probably within a month, where you can learn all the basics. But until that, you have plenty of YouTube videos about that we can learn the basics of trading and so on. And if you really want to learn, if you really want to study, you want to jump into the markets, um, you need to get into e-economy. E-economy is lit, and you get a lot of resources from there. A lot of resources. E-economy is creating 6 and 7 figure earners in trading, in online, in the online income space, and so on. If you don't know what it is, check the link down below in the description box. So back into the markets. Enough talking. Gold. First thing I would say, first zone of reversal where we might see a little drop is here at the 127.2 Fibonacci extension. So this is a reversal extension. I pulled the Fibonacci from this top to this bottom. So that's the last swing downwards. And at the 127.2 extension, which is at the 1962 US dollar for the gold, we might see our first rejection and a little drop down. But I think we might come down here, maybe even all the way here. But I see us coming all after that or before that, doesn't matter. I see us coming all the way down up to about 1975. That's the level I spoke about before. And we might see the reversal of the markets either here, or we're going to see them here at this entry zone that I spoke about. So we got two entries for sell, this one and this one, where we see big reversals. So that's the big sells. We got a little sell here. I would argue that I would probably send out a signal in a Prosperous Channel Telegram group. If you don't, if you ain't in there, join it now. It's in the description box. I'll probably send it out later today, depending on how the market reacts to the zone. But I see definitely a little sell coming here. I would not put a lot of pips into that sell. I'll probably put in like, let's see, short position. So that sell will probably be just to here somewhere, to that level. So probably like, yeah, that's about 10 pips. So 100 pips. I mean, gold is gold. So, hey, what happened with the music? I just realized. So, we might have a sell here. I'm not saying I'm sure yet. What is going on? Guys, this is the thing when you have multiple screens. It's easy to get confused. It's supposed to give you clarity, but sometimes it gives you confusion. Very short sell, but before I ain't calling out no sell limit or anything because we want to first see what the market does here. So market might just shoot right through, right? Then we don't want to be in that sell limit. Or it might play a little bit and then do this. And even if it goes down to clear this liquidity, even if it goes down all the way here, because we got a lot of liquidity stuck here, even if it does that, it might do something like this. Come up here, do a fake out, and then boom, drop down to the zone here somewhere. So that's what I'm waiting patiently before I'm calling out this trade. I want to see first what's going on. And if I do, trust me, we're going to have a one take profit open because we don't know what the level is for the reversal. So we want to have one open if the market decides to just run down, which might happen because this all here, all this what you see here is emotions. All of this here is emotions, and those emotions needs to be cleared. So we're living on overhype here. In the same time, gold needs to go up. It was very oversold for a very long time. With that said, I'm gonna put this here so I don't forget it. And then we go into the watch list, the trade setup list, and we're watching GBP CAD. Why is that? Because we called out this trade yesterday. It's a monster trade. It's a real monster trade. But we already smashed take profit 1, take profit 2, and take profit 3. We already smashed them. Now the market is back down, retesting the 20-day moving average, 20-day EMA. On the 4-hourly time frame, what we got, yeah, we rejected 20-day EMA there. I think we might come down and test the 200-day EMA. We already been the testing, but I think we might come down, test it again. And then we'll probably see the markets go up at least to the sweet spot zone here. And yeah, guys. So hopefully y'all get a really nice, take profit 4 on this one. So congratulations to everybody that took the trade. We made some nice money on that one. After a couple of stop losses, it felt good to call out a good, profitable Forex trade, and I hope you guys took it. Looking at Euro USD, this one is interesting, very, because we had our sell zone, and that sell zone, where was it? Here. But yesterday with the news, and I said don't get into any markets during the news, and this is what I mean. You saw the market just smash through our sell zone because of that. So now I ain't saying nothing. We might come down. We might come all the way up. All the way up here. Reject the 78.6 Fibonacci extension to drop back down, which will be confluent with gold because gold, as I said, needs to go up as well. And both gold and the Euro USD, pump when the US dollar drops. So you understand? So what I see is either Euro USD coming up here, testing the zone and giving us a drop from there, or and clearing this liquidity, or we might drop already from here because the market is overbought, and then we're gonna play around a little bit at this area. So and before I call out any trade here or say that yeah we in for a sell here, I want to see what happens, how it rejects this area, how it treats this whole zone here. All right. So that is that about Euro USD, GBP CAD. Let's look at GBP USD. GBP USD is still stuck at this consolidation area. Crazy. Doesn't want to get out. I thought it was going to break out yesterday. See this white box is the consolidation area. I thought it was going to break out yesterday. It did this little breakout and then just pumped right back up after the news. after the news hits. So we will see what happens here. Right now, we're still stuck in this area. I see definitely the markets selling from here when it comes to the GBP USD. Maybe not big, maybe not a lot, but I would argue that the market will come down all the way to about 1.217. But I ain't calling out the trade yet. This is just a potential idea I see. Last but not least, we love to see our favorite friend, Bitcoin. What is Bitcoin doing? What's crypto space doing? So let's remove this drawing. That cell is done. Let's clear some of these drawings as well. And remember, guys, if you have any questions or something, type it in the chat box. All right. So everybody, I don't need to talk about the history. What has been this whole bull run? We had these double tops. After the bull run, did a fake little bear run and went back up again. Kind of faked us out. We thought this is when everybody thought it was going to go to 100,000, but it didn't. It reversed at about 69, and we had this whole drop down. Okay, now with that said, where are we going with this? We've been in this big demand zone where I said I think we were at about 40 or 35 when I said I think we're going down to this demand zone here. This demand zone is the Fibonacci pull from this bottom all the way to the top, and then you get this demand zone. The 78.6 and the 88.6 Fibonacci retracements. So we came down here, picked up liquidity. I said that I think we're going down all the way to about 11,400. I even gave my exact price prediction that we're gonna hit 11,400 before we back in a bull run, and I still stand for that. I still believe actually that we're gonna reverse. It's just a little fake bull run, and we're gonna get back down to about 11,000 this area before we start to move our way up. But we don't know. Maybe this was the bottom. Maybe we're going up frame, because one thing that is speaking for Bitcoin and for cryptocurrency, especially Bitcoin, is we got a lot of institutions coming in. We got a lot of institutional money pumping into the crypto space, and BlackRock being the world's biggest investment firm. They're holding trillions. They control basically half the world, if not even more. They control all the big companies, industries, firms, and so on. I will do a video on BlackRock. It's insane actually. They are the real matrix. They are the real, I don't know, Illuminati, call it whatever you want to call it. They are the real matrix. But they are in Bitcoin. They are in crypto, and they have invested heavily. They started to invest when we were at $15,000 for Bitcoin. So you see this big institution starting to come in, which is signaling that we are going up. Even though they paint the picture of crypto black, they still go in and invest, right? So either they're gonna dump off now, cash in the profits, because they made a lot of profits from 15,000 to about almost 24,000 that we at now. So maybe they're gonna sell off now, cash in the profits, wait until the market comes lower, cash in again, buy in again, or they hold it. Now, where are we in the markets? We start by looking at this whole swing. We still got a long way to go until we even reach 23.6 retracement. But I just wanted to show that so we know that. And now let's look at this swing. Why we're looking at this swing, I'm gonna explain that quickly. So we have this whole sequence down. Okay, very good. Of course, that's the big sequence that is, and the big swing that is important to keep a track of all the Fibonacci levels there, but we still, as you saw, got a way to go until we reach the 23.6 Fibonacci extension of this big swing. So we're looking at the last big swing, and that is the biggest one, is this one, from this top to this low. Why is that? Because in this whole sequence, you saw a higher high suddenly. For here was higher low, lower high, lower high, lower high, higher high, higher high before we start to form lower highs again. So this broke this structure and created a higher high, and that's why this is a separate swing that we're looking at. And looking at that, what do we see? Well, we rejected the 23.6 Fibonacci retracement perfectly right here and broke above it. That's the interesting part. We broke above it. We have a lot of resistance from here. There's a lot of resistance on the daily time frame, so it will be very interesting to see what happens inside here. If we reject it and come down to clear some of this liquidity, or if we just break through and pump up. The interesting thing is also, with this said, is that we have a lot of liquidity here in this zone, and even though markets came up here, it didn't clear all of this liquidity. It didn't clear all of this liquidity here. We got a lot of liquidity here. So we need to come in at least 50% to clear all that liquidity. So I think it's gonna. I think it's going to happen now. I think we might go all the way up to 28,000 before we see another drop. But we'll see. And remember, all I say, nothing is financial advice. I'm not a financial advisor. I don't give financial advice. I just say what I see and what I do myself in the markets. And if I call out trades, it's always trades that I'm in myself, that I'm doing myself. I never call out trades that I ain't jumping into myself. Right now, guys, I'm gonna be honest. So this thing might go up to 28,000, but it might also reject at 25,000. Why 25,000? Because we got a lot of resistance there. You see here from the 25,000. So we got a lot of resistance there, but I want to have some more confluence before I say anything. And where can we find confluence? Well, we can find it in our Fibonacci swings. Let's look at this. Oh, this is interesting. So you see the 61.8 Fibonacci extension conflues perfectly with the resistance we were looking at, and would set a perfect sell zone right here. So let's see what the market does before we call that out. I'm gonna leave this Fibonacci there because to keep a track on if we reverse from that zone or not. And that is basically no Monero today, because we had a very interesting day in the market. So I'm saving Monero for later. And just a quick look we gotta do. We gotta check it quick just to see if it got something sweet for us. Nah. This one is interesting. US 30 is always interesting, the Dow Jones. Yeah, so I'm gonna look at it later, and if I see something nice, I call it out in the Telegram channel. If you're not in it, jump into it. Links in the description box. With that said, I wish you all a prosperous day. Stay blessed.